Hey puppy traders, I wanted to do a video analysis update on the stock market now that we have reached the SPY 392 target. Okay, so where did 392 come from? Was I, looking at tarot cards? No, this was just a very simple bull flag, equal legs target. Okay, roll your eyes, equal legs, equal lines work. Okay, this was a bull flag. We took the length of the bull flag, wave one, we placed it this low. That gave us, voila, a very conservative 392 target. We've had this marked out since December 22nd or December 26th. We've actually been talking about 392 for a very long time. We hit 392. Where do we go from here? Do we just keep raising our price targets? Do we start looking at fundamental theses? No. Okay, we do what we've always done. We analyze the S&P 500 not by looking at SPY, but by looking at IYR, XLV, healthcare, XLE, energy, and acknowledging they have very bullish setups. We're also going to look at American Airlines, Boeing, and Chevron in the long term to talk about how we know that this bull market is not ending anytime soon. Okay, it's not going to go up in a straight line, and that's a very important point that I believe this user is making. He said, "I'm worried that the retail traders are going to start laughing like hyenas, and that shorts are going to start capitulating, saying, why bother?" That's an extremely important point. We need bears. We need bears. A bear is a bull's best friend. Why? Because a short seller is the only guaranteed buyer in the stock market. Once you run out of short sellers, you're going to have a dip. Okay, we need short sellers. We need bears. Bears are your best friend because they are the only guaranteed buyers. Okay, so why does Tesla, why does Beyond Meat, why does Bitcoin, why do they go on these crazy rallies? Well, they actually go on these crazy rallies because they're heavily shorted. So people will say, oh, Tesla's overvalued, right? They'll do some fundamental analysis. They'll talk about sales growth or something. And they'll say, that's why I'm going to make a short position in the market that can lose infinite money. Well, guess what? If everyone's thinking like that and everyone's shorting Beyond Meat, everyone's shorting Bitcoin, everyone's shorting Tesla, guess what? As soon as Tesla and Beyond Meat and Bitcoin go up a little bit, well, they're the brokers of the people who are shorting these positions. They're going to say, hey, you owe me a lot of money. You borrowed more money than you had to open a short position that could lose infinitely more money than invested. And so your broker, if you're a short seller or an option seller, is going to look at your position and say, yeah, you might want to stay in this position, but I don't want to stay in this position. And he will force liquidate these short sellers. So what's going to happen when you are a short seller and your broker force liquidates you? You're forced to buy a stock at a higher price. Okay, so short sellers are the only guaranteed buyers in the stock market. That's why I really like this point. He's saying we're going to run out of shorts. Okay, and that's a very great point. If we run out of shorts, we're screwed. Okay, we need short sellers. So let's talk about a stock that's heavily shorted, right? We always hear, oh, Tesla's overvalued, right? I don't know what overvalued means, but apparently it's a good reason to invest infinitely more money than you can afford to lose in a speculative position, okay? Otherwise known as gambling. But at least gamblers, they're only putting down money they can lose, okay? When you're a short seller, that's gambling on crack because you can actually lose more money than you invested, okay? That's extremely dangerous, okay? And a lot of people do this, okay? I think they're insane. But Tesla has already gone the length of this run from the March low to the September high, placed at the September low. Tesla's already gone the length of that entire move, placed at this low. Okay, it has reached what I call the equal legs target. It has reached the bull flag equal legs target. It had declining volume confirming bullish consolidation. We have all this documented that we saw this coming from a mile away, well before the S&P 500 inclusion news broke, well before Biden was elected even, and then Tesla goes on this crazy run to the equal legs target. It is past the equal legs target. Okay, so Tesla is the leading indicator in this market. Okay, the leading indicators in this market are Tesla, Bitcoin, Ethereum, PayPal, and Square Cash. Okay, what do I mean by that? Well, if we look at every sell-off that has happened since 2020, PayPal, Square Cash, and Tesla and Bitcoin and Ethereum have gone on ripping rallies higher. Okay, so that was one really important point that I was making. I was asked about PayPal, I was asked about Square Cash, and I said, whoa, it looks like Square Cash and PayPal are both forming giant bull flags from the March low and the September high, just like Tesla did. Okay, so I said, hey, it looks like Square Cash and PayPal are about to do what Tesla has already done. They're going to go the length of this move in time and price placed at this low from September, okay, or placed at the low of the bull flag. And I said the same thing about Square Cash. I said Square Cash is going to go the length of the March low to September high placed at the bull flag low, okay? And if we look at the charts of Square Cash right now, Square Cash is damn near the bull flag equal X target, okay? PayPal is damn near the bull flag equal X target. Tesla has already passed it. It looks like it actually wants to go higher, okay? What's that mean? Oh, should we, chase PayPal, Square Cash, and Tesla here? No, okay? That is not what I'm saying. I'm saying that Square Cash, PayPal, and Tesla are the leading indicators for the stock market. So let's look at SPY real quick. Okay, we'll talk about SPY in the short term, but let's look at SPY real quick. SPY has already done what I said, what Tesla would do, what I said Square Cash and PayPal are about to do. We're going to see if SPY is going to do this exact same thing. So SPY actually has formed a bull flag itself. This looks really clear on Apple. This looks really clear on Nvidia. This looks really clear on Microsoft. If we take the length of this bull flag and we clone it and we place it at the September low, which is exactly what Tesla, Square Cash, and PayPal have already done, we believe that SPY this summer will reach 460. Okay, that is just a classic bull flag, taking the length of this low from March to the September high, placed at the September low. Okay, is SPY going to go there in a straight line? No, it will not. Okay, so let me get this pitchfork out and talk about what this could look like in a broader view. Okay, because I'm not saying that SPY is going to run to 460 in a straight line. Okay, because as our user on Twitter said, Mr. Thomas, he made a very great point. He said, we're running out of shorts. We're running out of shorts. Okay, we need bears to go higher. But Mr. Market, he's mean. He's mean. He's not going to let anyone who has been shorting since the election run off with a profit in this market. He won't. Okay? So what I'm hoping will happen in the very short term is that we'll get some type of dip. Okay? Because what it looks like right now is that SPY has gone on a rally from the late January low. SPY has gone on a rally, and this is all a wave 1. We're looking to buy a wave 2 dip and hold until wave 3. Now, I'm already long the market. I'm still long the market. I have some cash to buy dips on various stocks. We'll talk about some of those. I think the best dip buying opportunities, if this dip comes, is going to be in Apple, is going to be in Netflix, is going to be in AT&T. Here's the problem, okay? Here's the problem. In the Elliott wave theory, there is one critical flaw with Elliott wave theory, and I'll write it right now. Corrective waves in wave theory are not guaranteed to happen. Okay, a lot of people don't know this. A lot of people don't understand this. Okay, but this is extremely important to understand. A correction in Elliott wave theory is not guaranteed to happen. You have to be prepared for it. You have to have cash to buy the dip against the what we call the impulse. But a correction is not guaranteed to happen. That's why we never, ever short corrective waves. Okay? What does that mean? Well, we believe that SPY is gone on one impulse from this low. And that's very good because the minimum wave 3 target is the length of wave 1. So if we get a dip next week, that'd be an incredible buying opportunity. The stocks that I think would be best to buy, in my unprofessional opinion, would be Apple, Netflix, and AT&T. We'll talk about those setups, okay? But the reason that we don't short corrective waves is because impulse waves can extend indefinitely, okay? A lot of people don't know this, okay? Impulse waves can extend indefinitely. So the reason that we don't short corrective waves is because corrective waves are not guaranteed to happen. Why aren't corrective waves guaranteed to happen? Because impulse waves can extend indefinitely. I have a lot of people, my target will be reached for a stock like Novavax or Tesla, and they'll say, hey, puppy trades, it's the time to short. And I'm like, no, because these waves can extend indefinitely. Okay, and it looks like right now, what could be happening This is why I use pitchforks. That's why I use bull flags. It looks like this wave one from this low is still extending. Okay, when this wave one finally ends, we are going to have a really nice dip buying opportunity. Okay, now I'm still long the market. You know, I wouldn't even think about selling my Camping World shares, my Ride, Lordstown Motors shares, my Beyond Meat shares, or my Pfizer shares, or my Lee Auto shares. I wouldn't even think about selling those stocks that I made a video on at the very beginning of the year. Wouldn't even think about that. Those are long-term investments. You know, even the gold miners, I made a video about 2 days ago. Those are long-term investments. Okay, I'm making this video as a short-term market update. It looks like this wave one from this low is extending. Okay, that's why we don't short anticipated corrective waves. Even if we hope a corrective wave will happen, it's not guaranteed to happen. So, bottom line is I do believe that we are going to do what this pitchfork has told us we're going to do for quite a long time. We are going to go to the median of this pitchfork. Okay, if we get a dip to the lower bound, that'd be an incredible buying opportunity for Apple and Netflix. We'll talk about Apple and Netflix later in this video. But I do believe what's going to happen, we're going to go to the median of this pitchfork. Once we get there, we're going to have a pretty big reaction, and we are going to break out, and we're going to back test this bull flag. Okay, so this is the ideal, kind of setup, is that we're going to go slightly above 400. We're going to reach the median of this pitchfork, and then we are going to break out and back test the bull flag. This would be a huge buying opportunity when we get here, and then we are going to go back test this bull flag, just like we back tested this bull flag. We broke out and back tested this bull flag. I believe we are going to break out and back test this bull flag on the 6 to 9 month time frame, and then that's going to get us ready for our big run this summer to 460 for SPY. Okay, remember, corrections in wave theory aren't guaranteed to happen. You don't short when you think that there's going to be a correction. You have cash to buy dips. Okay, so bottom line, I think that we are still going to go to the median of this pitchfork. If we get a correction on the lower bound, that would be very good. But I do believe we are going to go to the median of this pitchfork. If we got a correction next week on this lower bound, it would be a great buying opportunity. We'll talk about these setups I would like to buy. Let's look at XLE real quick. Okay, so XLE is looking really good here. We believe XLE has gone the length of wave one in time and price, made an ABC correction right before the election to put in a very important wave two. We believe XLE is incomplete to the upside until it goes back to the median of this pitchfork. So, bears, if you want to gain my respect, get XLE below this low of 38. Get XLE below this low of 37. We'll start giving the bears some respect. Okay, so let's just say right now, bears, you get below 38. You get below 37 on XLE, you'll have my respect. I don't think you're going to do it, okay? Look at this beautiful reaction on the median of this pitchfork. I love this reaction right here. If we got a dip next week, dips are not guaranteed. I think XLE would also be a really good one to enter with a stop below 38.94 and a little wider stop below 37. Bears, get XLE below 38, get XLE below 37, you'll have my respect, okay? I don't think you're going to do it. So we have a wave one, an A, B, C correction, wave two. We take the length of wave one, we place it at the wave two low. XLE is to be considered incomplete until it reaches 51. Okay, so XLE is incomplete until it reaches 51. Well, what's that mean for the stock market? Remember, if we want to know where SPY goes, we don't stare at SPY, okay? We look at the components of SPY. If we believe that XLE is incomplete until it reaches 51, then we are not going to be calling tops on SPY if we believe oil has more upside, okay? So bears, get XLE below 37, 38, and you'll have my respect. Bulls, I think we can hold strong until 51 is reached, until the median of this pitchfork is reached for our minimum wave 3 target, okay? Let's look at XLV. I love this setup in XLV right now, too. Let me make sure we can see this. I love this setup in XLV. Okay, we had a clear wave 1, an A, B, C correction put in a wave 2. We have a beautiful pitchfork. If we take the March low connected with the high in this low, we have all these great reactions on the median. So when I say the median acts as a magnet, the median acts as resistance, this is exactly what I'm talking about. This is beautiful reactions on the median of this pitchfork. Tons of validation. Look at that pitchfork. Look at that candle. I love seeing the doji of a daily candle just perfectly strike the median of the pitchfork. We connect our pitchfork, and then we have, boom, all these reactions on the median of the pitchfork. Then we have all these reactions on the lower bound. So we went wave 1, A, B, C correction. Wave 2, we formed our bull flag, and then we broke and closed above the high of wave 1, confirming this was all consolidation. The wave 3 minimum target is 121, and the 161.8% extension is 123. So we believe that XLV will go from the lower bound of the pitchfork to the median of the pitchfork. Okay, that's really important, because if XLV is incomplete until the lower 120s, then there's no reason to be calling tops and SPY. So if we believe XLE is incomplete until 51, and we believe XLV is incomplete until 121, 123, we're not going to be calling tops on the S&P 500. Let's do a quick change of gears here. Okay, I know a lot of us are really interested in Boeing. I'm personally long Boeing. I think Boeing finally is starting what we call an Elliott wave theory, a wave 3 of 3. We take this low, connect it with this high and this low, and then we have our wave 1, our wave 2, then we have a wave 1 and a wave 2. It looks like we're finally turning. I think we're finally starting this wave 3 of wave 3. We have these reactions on the lower bound. We're going to be heading to the median of this pitchfork. This is an Elliott wave nest. 1, 2, 1, 2. I love seeing us test this high right here of 189 in reverse right before it. So for now, let's see Boeing hold above 191. Let's see Boeing hold above 189. I don't think this will happen if 189 is tested. We really want to see a quick reaction, but I think right here we got a reversal. We started wave 3 of wave 3. Our very minimum target is the length of wave 1 in time and price placed at this low. So I think Boeing is still on track to go to 300. This should happen by mid to late March. It's not happening as quick as I thought it would. I don't think we'll get to mid-April and not see Boeing go all the way the length of wave 1 in time and price placed at this low. For now, let's see 191 hold, and then the minimum wave 3 target is 293. What's another reason that we were really interested in Boeing besides this beautiful 1-2, 1-2 Elliott wave nest, besides these beautiful reactions on the pitchfork and this buying opportunity on the median, what's on the lower bound to head back to the median? What's another reason that we were really interested in Boeing? We're going to talk about that right now, okay? So, long term, people are calling for a crash in the stock market. That is a lot of hogwash in my opinion. But what's kind of going to be the theme of the second half of this video is why the stock market's a lot more bullish in the long term than a lot of people think. And like I said, if you just look at SPY all day, you're not going to have fun because you're not going to see what the rest of the market is showing you, okay? So what's going on? Well, we believe that Boeing put in a large, and we'll recreate this on American Airlines, we'll recreate this on Chevron. We believe Boeing put in a very large degree wave 1 with an A, B, C correction during the March sell-off, okay? So what's this mean? This means that Boeing, the company that makes all the airplanes, in my opinion, will never, ever, ever go below 89. Boeing will never go below 89. Chevron will never go below the March low. American Airlines will never go below the March low. What's that mean? Well, they're going to break above this high, okay? This is a large degree wave 2. Boeing will never go below this low of 89. It's going to be heading above this high of wave 1, and that means Boeing's an incredible, in my own professional opinion, incredible long-term opportunity. That's another reason we were focusing on Boeing so much, because of what it says for the overall stock market. Boeing never goes below this low, and this is a confirmed ABC completed correction. We might actually have to go to the 20-year chart. But yeah, this is a perfect wave 1. An ABC correction puts in a wave 2 low, and now we're starting wave 3. Okay, so Boeing will be going above this high of wave 1. Okay, that's extremely bullish for the stock market in the long term if we believe that Boeing will be heading above 446 and then starting a wave 3 that is much bigger than wave 1. And then, of course, wave 3 is not the last wave. We have a shallow wave 4 correction and a wave 5 higher. We're talking about, 3, 4, 5 years down the road, Boeing's going to be near 1,000, right? So if we believe Boeing is going to 1,000, it doesn't really make sense to be bearish the stock market in the long term, okay? And it's not just Boeing. Okay, but this is a wave 1. An ABC correction puts in a large degree wave 2. Boeing will be heading above this high in the long term. It's going to be starting a wave 3, which is much bigger than wave 1, have a shallow wave 4 correction, and wave 5 higher. Okay, we'll talk about what this could look like, on the S&P 500 towards the end of this video. Let's look at Chevron real quick. Same idea. We talked a lot about oil. It's the same idea with Chevron, where we had a 1, 2, 3, 4, 5 waves impulse. We completed an ABC correction and put in a large degree wave 2. So we put in a very large degree wave 2 in March 2020, just like Boeing did. Large degree wave 2. So Chevron also, in my opinion, will never, ever, ever go below this March 2020 low of 51. Okay, so what's that mean? It's going to be going and targeting above this all-time high of 135. It makes the perfect ABC correction. Now Chevron starting wave 3. Okay, so we believe Chevron is starting a wave 3 is going to go much further than the length of wave 1, placed at the wave 2 low. Chevron is going to have a much larger degree impulse than this whole move. And then Chevron is going to have a shallow wave 4 correction and then have another wave 5 higher. Okay, that means that Chevron's going to go up for the next 4, 5, 6 years. The next 10 years, Chevron looks like it's going to be entering a huge bull market. And that this low is never going to be broken. We're going to go above this high. We're going to start a large degree wave 3, have a shallow wave 4 correction, and then a huge wave 5 higher. That's going to be at minimum the length of wave 1 again. We're talking about Chevron is a $300, $400, $500 stock, this decade. Okay, so we believe that Chevron is going to triple, quadruple, quintuple. We believe Boeing will triple, quadruple, quintuple in the long term. We're not going to look at SPY and say, but SPY is going to crash. We're going to have the Great Recession. Okay, so you got to analyze the whole market. Let's do one more. American Airlines. I love this. Wave 1, ABC correction puts in a large degree wave 2. American Airlines never going below the low of 8.25. American Airlines will never go below this low. What's that mean? It means it's going above the all-time high of wave 1. So the all-time high is 59. American Airlines is going to be heading above that high in the long term. It is going to have a huge, huge bull market. Wave 3 will, at the minimum, be longer than the length of wave 1. We'll have a shallow wave 4 correction and a wave 5 higher. We're talking about American Airlines, more than quintupling, more than, doing a 10K on its current value. So if we think that American Airlines is going to, at the very minimum, quadruple and go above this high, and that Boeing is going to go above this high, and that Chevron is going to go above this high, doesn't make sense to look at the long-term chart of SPY and say, it was going to be crashing during that time. Okay, let's look at let's shift gears back a little bit. Let's look at Netflix. Okay, I like this Netflix setup. If we get this dip that I've been talking about, Netflix is going to be one to watch. Okay, so this is a textbook bull flag, in my opinion. We're going to see Netflix go the length of this bull flag in time and price placed at this low. Okay, so we had all this consolidation. Netflix consolidated with declining volume bars for, let's see, this was mid-July. This was mid-January. So over 5 months of consolidation, about 6 months of consolidation, and then Netflix has a huge breakout. It gaps above this high. So what I believe is that if we get a dip next week in the S&P 500, Netflix is a great one to be looking to buy dips on. Okay, and here's why. The low of 515 is our invalidation and our stop loss level. Okay, so if Netflix dips, I want to be buying it as close to 515 as possible. I already talked about Netflix at 550. If you're in Netflix now, unprofessional opinion, great work. But 550, 540, I don't think we'll get 540. But if we get 550, that's a great place, in my unprofessional opinion, to enter Netflix with a stop loss below 515. And then Netflix will be going the length of this bull flag in time and price placed at this wave 2 low. So even if you're not interested in Netflix, right? You're not interested in Netflix. Well, if you think Netflix is going to be going from 556 to 742, I think 742 right now looks like a late April, mid-May target, then you're not going to be very bearish on the stock market during this time. Okay, so I do believe Netflix right now has broken out of a huge pattern of consolidation. This is a textbook bull flag. Okay, and if we believe that Netflix is going to be going the length of the first leg of the bull flag in time and price placed at the low of the bull flag, Netflix is going to go to 542. I think from a wave theory standpoint, it's going to look something like this, where this was our wave 1 breakout. This was our wave 2 correction. So that's why it's so important that 515 holds as the low, because if 515 holds in the low, doesn't hold as the low, then this wasn't the end of our wave 2 correction. So 515, stop loss, and invalidation for this setup. I don't believe it's going to be broken, but I think Netflix has broken out of this bull flag. It's back tested this bull flag, and then waves 3, 4, and 5 are going to take Netflix to the equal legs target for this bull flag of 742. We also have a really nice pitchfork on Netflix when we take this low, connect it with this high and this low. Very nice reactions on the median of the pitchfork. Median acts as a magnet. Then, pitchforks don't work. Yes, they do. We go right back to the lower bound. We have a beautiful gap with a huge spike in volume after all this declining volume confirmed bull flag consolidation. So, another cool thing about my trading strategy, it's never just going to rely on wave theory. Wave theory is always going to be a huge part. Implied volatility is always going to be a huge part. But this is a textbook bull flag right now. I think right now a lot of people are going to be struggling looking at, SPY, because SPY right now is forming a textbook bull flag. Right? And if you're just focused on the wave count, you might be missing that. Okay? But this is a textbook bull flag, sideways consolidation with declining volume bars, and then large breakout of this bull flag with a huge spike in buyer volume. Exactly what we want to see. It breaks above this high. From an Elliott wave standpoint, it confirms that we are in a new bullish cycle. So as long as this wave 2 low holds at 515, I think waves 3, 4, and 5 are going to take Netflix all the way to 742. I think that's going to be hit by late April, early May. I think it's definitely going to be hit by this summer. And if you're not interested in Netflix, you should be interested in where Netflix is going, because if we think Netflix is going to go $200 higher, we're not going to be calling tops in the stock market during that time. Okay? Let's look at Apple right now. I think Apple right now is a really good other evidence that the market's going to be higher. So bears, if you want my respect, and bulls, you should listen to this too. XLE below 38 and 37 means a lot. Okay, if XLE goes below 38 and 37, you're going to have a lot of my respect. So get XLE below 37, 38. Get Netflix below 515. Get Netflix below 515, and get we're going to talk about Apple right now. Get Apple, I'll give you a sticker if you get Apple below 130, but if you really want my respect, get Apple below 127. We're going to talk about what those levels mean, okay? So let's look. Remember, Tesla has already gone the length of this bull flag in time and price placed at the bull flag low. Okay, so if you took the entire run from the March low to September high, you would see a textbook setup for a bull flag breakout and backtest. Netflix has already reached the length of the bull flag in time and price placed at the low from September. Okay, so remember, Tesla has already reached the length of the bull flag in time and price placed at this low. PayPal and Square Cash are damn near accomplishing that exact same feat. Etsy actually has already accomplished that feat as well, but PayPal and Square Cash and Tesla, they're really reliable leading indicators for this market, and they've proven that SPY is going to break out and backtest its bull flag, go to 460. I believe they're also proving that Apple is going to break out and backtest this bull flag. It's going to go to 180 this summer. So this is just a textbook bull flag. Perfect example of a bull flag right here with gorgeous declining volume bars confirming bullish consolidation. Love seeing this right here. Okay, so this is just our textbook bull flag. We have our sideways consolidation with declining volume bars, and then we have broken out of this bull flag. Okay, so this summer, I believe that Apple is going to go all the way to 188. So if you believe Apple is going to go to 188 this summer, you believe Netflix is going to go to 742 this summer, you're not going to be calling for a crash in SPY. That doesn't mean SPY is going to go up in a straight line, okay? But you're not going to be calling for a crash in SPY while that happens, okay? Before we get really nitty gritty into Apple, I really want to show you guys this source. I got a comment. I think it's really important to understand. I got a comment that said that Apple is at the very low of its. The Apple is really frustrating. Really frustrating inquisitor for the past few months. Words couldn't describe it. Well, words can describe it. Okay, because Apple's implied volatility has an average IV index right now of 30 compared to its 52-week range of 23 to 90. Okay, so what's that mean? That means the high for implied volatility in the past 1 year for Apple is 90. The low for implied volatility for the past 1 year for Apple is 23. Okay, Apple's IV right now is currently 30. That's very close to 23. That means that Apple is very close to the 1 year range, the 1 year low range of its implied volatility. Implied volatility is cyclical, just like price is cyclical. Okay, so in the options market, options are very cheap when implied volatility is very low. When implied volatility hits a trough in demand, or when implied volatility hits a low, options will eventually hit a trough in demand, and then we'll see the market go from a seller's market to a buyer's market. Okay, so I believe right now Apple options are in a buyer's market. Okay, that's not investment advice. That's not saying go buy Apple options, but it's important to know that the stock market isn't broken. Okay, your frustration, the options market is very aware of this. It knows implied volatility is near the 52-week low. Okay, so if we get a dip in Apple, here's what I think will be a really nice short-term setup. Remember, I believe Apple's going to 188 this summer. Let's clear this out for a little bit. Talk about what this could look like. Okay, so for Apple, I think we have a really nice bull flag as well. If we take the length of this move in time and price, we have a really nice bull flag. So I think in the next 3 to 4 weeks, Apple is telling us that it's going to have a run up. That's another reason that I'm not, too bearish on the market, is because I think there's a really nice setup in Apple. And we have been talking about Apple reaching 152 as a signal to get out for quite a long time. Okay, Apple is yet to reach 152. We'll talk about where that came from. So where did that come from? That came from Apple going the length of this move in time and price, placed at the low of this ABC correction from this September high. Okay, so once Apple broke above this high, it confirmed that all of this was consolidation. It confirmed that it was in a new bullish cycle. So this is the A, B, C correction. Apple broke above this high from September. It confirmed that all of this was consolidation for another leg higher. Okay, so it doesn't really make sense to be bearish the stock market if Apple just had a huge breakout. So we already explained this summer how a bull flag is going to take Apple all the way to 188. In the very short term, we have another bull flag right here that I think is quite interesting. So we take the length of this move in time and price, place it at the low of this bull flag, voila. It is the exact equal legs target of the length of this move in time and price, placed at this ABC low. It's the exact same target of 151 that we get from this bull flag right here. So it looks like these algos are really going to love 151. If we get a dip in the stock market, I think if you really want to play it conservative, not investment advice, 130, I want to buy Apple as close to 130 as possible. We've already gone over how implied volatility is very low, so options are very cheap right now. If we get Apple as close to 130 as possible, that's going to mean that the premium on Apple calls is going to hit an extreme low. You want to have a really tight stop loss to be 130. I think for a more reasonable stop loss for this bull flag is 127. Remember, Google and Microsoft and the Nasdaq and SPY are already above this high. They're already above this high from last January. So I think we have two equal legs targets right now that are really telling us, hey, Apple needs to go to 151, 152. That's why we've been talking about not only SPY reaching 392, not only XLE reaching 51, not only XLV reaching 121, but Apple reaching 150, 152. We think that has to happen before there's a major top in the stock market, okay? So I think in the next 3 or 4 weeks, we will see this low of 130 hold. We're going to see this implied volatility. We're going to see this implied volatility expand. We're going to go from low implied volatility, low option premiums, low movement. That's giving all these retail traders frustration. And we're going to see Apple break out. It's definitely going to go above this high of 145. The very minimum, it's going to go to 152. What could this look like in the long term, right? Because I said Apple's going to go to 188 this summer. I do believe Apple will go to 188 this summer. So what's that going to look like? Well, I think from a pitchfork perspective, it's going to look very similar to SPY, okay? So remember, bears, you want my respect, get Apple below 127 to 130, and, we'll start talking about the bearish scenario, okay? But, the burden of proof is clearly on you guys. What could this look like? Well, Apple, in my opinion, is going to go to the median of this pitchfork. Okay, that's why I also believe 151, 152 is a very conservative target. I think Apple's going to go to the median of this pitchfork. What it's going to look like is Apple's going to go to the median of this pitchfork. We know from Tesla, PayPal, and Square Cash, Apple probably is going to do what SPY is going to do and go to the bull flag equal legs target of 188 this summer, around the time SPY is going to 460 this summer. So let's look at this. I think what it could look like is that Apple will go to 150, 152. It's going to reach the median of this pitchfork. And then when SPY is breaking out and backtesting its pitchfork, Apple is going to break out and backtest this bull flag. It's going to be a really great place to enter Apple right here. So let's see Apple reach the median of this pitchfork. I think it's a really good setup in the short term. I think there's a ton of evidence Apple's going to 188. Remember, corrections in wave theory are not guaranteed. We prepare for corrections. We don't short them. Okay? I love Apple as a short-term setup to 150, 152. I love it as a swing trade to 180, 188. And I think right now it is it's giving a lot of evidence that the stock market hasn't topped. So bears, you want my respect, get Apple below 130 to 127.